This section is going to be more or less a review of everything that we've talked about, but repetition is fantastic, and looking at the setups again, and as I'll explain them to you, just help reinforce everything that you've learned so far. So let's continue. All right, as swing trading and what we're reviewing, I'm going to assume that we've already gone through and reviewed the broader markets, sectors, and stocks. That's done. So we have our bias and we're ready. Go through and formulate our entry points and look at our swing trades. We'll review those foundational setups and patterns, and we'll review the components of those patterns and put them in the context of how it formed in that big picture. Again, this is what we've been talking about throughout the course. And as we cover those in those individual parts, I'm going to explain that all together in the chart examples. When we look at breakouts and breakdowns, right, this is a concept that many just don't get. I can remember years ago doing one of the trading challenges, and a fella that was trading there was selling software packages that the essence of it was to trade the novice breakout, meaning it was moving from a low all the way back above the prior high rather than buying the pullback. His entry points were here, and while that can actually work out, if your stop is down here, it should never go down there. But this particular individual, where he was selling his software packages that showed where these things did work, his stops were here, which was just silly in my point of view, because that's just not what we do. It's a novice play. What we look for is breakouts to occur where there has been some consolidation just prior to the breakout. In other words, there's been this shallow pullback, this refusal to go down here, and then we are buying the breakout. Or if we've missed that and it breaks out, we look to buy the pullback toward what was resistance becoming support. Common sense. Why would I buy something that's moved already greater than 100% from the bottom of the base to above the top of the base? Doesn't make any sense to me to be buying at that point, when if this is what happened and I recognize this as a break above these highs, what we're going to do as master traders is then wait to see if you get the pullback to support or a bullish consolidation that creates a support level, and then get the entry point from there. And you might be saying, well, Greg, what if it just takes off and just keeps going higher? So be it. It's not my money. That's not part of my plan. It's either going to do this, or I'm not going to participate. That's the discipline. I'll just move on to something else. I don't need to take on this trade, right? And because I don't want to put my stop way down here. It's either going to give me a secondary piece of confirming information, bullish or bearish, or I'm not going to participate in it. Retracements and pullbacks from breakouts, those are foundational entry points for us as swing traders. Meaning what I'm looking for is pullbacks to minor support, pullbacks that go all the way down to major support, can be traded under the proper scenario, meaning higher time frame. Our macro time frame is in an uptrend, bar by bar analysis supporting that buyers are stepping up, little breakdown failures, or even a W bottom within that retest pattern. You've got the tools. Use them intelligently. And breakouts, support being created, and you just look for your candles that are forming there, little downside shakeouts and bottoming tails and 180 reversals, red bars ignored. You've got the tools at this point to recognize what's happening. You're going to look, is there a price void over to the left? You looked at the broader markets. You're putting the odds in your favor. And the same thing on the short side. What was support will become resistance, minor resistance, consolidations. Is there a void? Factory work. You've got the method, you've got the process, just repeat. If it doesn't set up, you don't do anything. We've already covered this, but review is great. Here we've got different patterns that we are looking for our bullish setups, and just turn them upside down for the bearish setups. There's tracement and reversal, a red bar ignored, that's a continuation type of pattern, a little breakdown failure, and in this case the way I've created this is you've got a big wide range green bar around the red bar, and again, repeating, these are bullish setups, which by definition mean they're in uptrends, or they're at some support, or they're bottoming, and the macro time frames are pointing up. So I repeat that because I know those that are new, where you're trying to assimilate this information, at times forget different concepts. So if I keep repeating them, it's so that they become ingrained in your thought process. And by you practicing and repeating, it'll become ingrained in your thought process, and you remember the different components of our method and putting it all together. Whatever you call it, it's going up. Putting that together, you know that the 3-bar reversal is the same as a 1-bar reversal. We've just expanded the data. Failed sell setup, that's not a real sell setup because we're assuming it's in an uptrend, correct? We said that these are long setups, so that this reversal, the red bar at that time, while it does suggest it should go down, it should turn into be a red bar ignored. 180 reversal, well, we've condensed the data a bit from the one directly to the left, and it means the same thing as the bottoming tail bar. 1, 2, 3 continuation pattern, so a wide range bar up creates a price void. The inside bar builds up a little consolidation on the base, and we get a continuation to the upside. And while I don't have it drawn here, remember, is there a volume spike there? Secondary piece of information, but good information when it happens. W bottom, a retest pattern, one of my favorites, where we get a reversal, prices move up, they come back down to retest, buyers step up again. In this case, we've got a wide range bar. Great setup. So we've got 4 foundational patterns, many different variations, but bar by bar analysis enables you to recognize anything that's happening at the time. We don't need to have a specific pattern to say that this is what has to happen. Bar by bar analysis and alignment, which are multiple time frames and trend, are going to tell you what's happening. So the thing is to understand that you have normal type of retracement patterns, you've got retest and failure patterns. Flag patterns are one in which they're creating support or creating resistance. A well-developed base is one in which there's a longer consolidation. And one of the tools that we talked about was this longer consolidation in an uptrend where it gets far from the 20, catches up, or the 20 catches up with prices, where you've got this longer consolidation. Or if it's in a downtrend and prices have moved down rapidly, the 20 MA is caught up with prices, and that then suggesting a continuation of the trend. And of course, you're looking to see what's to the left. Is there a void? Shock patterns. We've looked at a lot of these already. I've shown you a lot. So this is to reinforce what you've already learned. Shakeouts, where you've gotten a consolidation and then you get a break to the downside and it immediately reverses back up again and goes sideways at that resistance. That's a bullish shakeout type of failure pattern. And this is a variation where now instead of a reversal red bar, you've got this topping tail bar, right? The top side shakeout or bearish shakeout. This one would be the bullish shakeout, and then the same sideways consolidation, and then we'd look for the continuation lower. Breakout bar failure, where we've gotten wide range bar breaking out above a few highs, we get an inside bar, and then it breaks below the low. So if we're long and this happens, we exit below the low of that bar, not go short unless this was in a downtrend. It was in a downtrend and we got the breakout bar failure, we then could go short that type of setup. Breakout failure, topping tail, it's just a different variation. Here we're compressing the data. It's to understand that different pictures mean the same thing. We need to go back to the candlestick section, multiple time frame section, review it, and you'll see how we're repeating this information in different pictures, in different ways, but we understand what's happening and how to use it. A breakdown failure here. We've gotten a breakdown here. We've got a shock pattern where it attempted to go down and a 180 right back up again. It should go up. If it goes sideways and it turns into a variation of a shakeout pattern, that's okay. I understand all of this. This bar by bar analysis tells me that these things can form in different ways. However it forms, I understand what's going on here and how to take advantage of it. Here we have M tops and W bottoms. These form in different ways as well. Now, this M top, if it's a climactic kind of pattern, let's say that the weekly has become climactic and this is a wide range bar on the weekly time frame. Multiple bars moving up. It's a wide range bar. And now on the daily time frame, I've gotten this type of pattern, which could be 2 bars going side by side on the weekly time frame. So at times where we drill down, right, the daily is our primary time frame, but we've gotten a bias from the weekly, and this pattern could provide us an entry point to sell short. This one, not so attractive under that scenario, but pointing out the differences here. It's the opposite on the downside here. This could be a climactic move lower or a wide range bar to the downside on the weekly, ending the move, and then on the daily time frame, we're getting this W pattern. In addition, this certainly could be in an uptrend. This could be happening in an uptrend where we're getting a W pattern within a price void. So there's a sharp move up, and then a pullback and creating support. This M top that we have right here is one in which it was a deep pullback. So we've got a breakout and a deep pullback into support and then a retest. In this situation, we're kind of getting a pattern here that's giving us a warning that distribution is happening. This could be in an uptrend, and this is the kind of pattern that we really don't want to see. A combination of a breakout failure and a deep pullback and then a retest with a topping tail and a bearish bar. All of that giving us a warning that the trend is beginning to deteriorate, and this just the opposite if it was in a downtrend. As we look at these charts that we're going to review, we're going to be looking at the daily time frame, and I'm going to explain it from the point of view that we already have looked at multiple time frames. And it says it means that there's a void. We've considered relative strength and relative weakness. We've looked at the broader markets, whether they're extended or not. It may be extended on the daily, right? So that may be getting started as an M or a W. And we're looking at these daily setups, whether they're at support, can that been taken, right? From a weekly time frame, is it extended? Everything that we're talking about, we're going to be bringing this together and looking at these patterns to reinforce what you've already repetition. And this is what you'll find the coaching sessions are about when we do them. You will benefit tremendously from when we do an MT Live because you're familiar with the concepts. So they're not going to be when you're hearing them the first time. And all of this reinforces what you've learned to where, the idea is for it to become second nature for you, right? And that's what it says, key to success. So in this example, we've got a nice uptrend, and what should be jumping out at you here is this nice bullish consolidation into a rising 20 MA, which should be telling you pay attention. I'll just point out a few things here. Volume bar spike that didn't follow through. We don't know it isn't going to follow through at that moment. We know after the fact that it didn't. Volume spike on the way up. Power move up. Look at the flat 20 MA, close to the 50 MA. The move is just getting started. This turned out to be just a very long consolidation. Bullish move starting again. Volume. Now this is an interesting concept here that we really haven't talked about, but a volume spike where prices have already moved up, and we've got that topping tail, which that's a bit of a warning sign there. But it resulted in a sideways move, so it all turns out to be bullish. And then wide range bar igniting, and prices continuing to move higher. And that's a bit of a concern, that wide range bar after multiple bars moving up, which could be ending the move. And notice the big volume there. So a lot of stuff going on this chart. Now here is another scanning page of mine. And so what we're looking at here is my swing trading page. And I'm looking for stocks that are trending up, and I'm trending down, and one in which there's been that volume surge on the day where I don't know what I'm going to find. So I just start clicking through that particular minder to see what's in it. So as I click on any of those symbols, it populates those charts, and I view them like I've already explained to you. Is it going up? Is it going down? Consolidated? Is it pulling back into the 20 MA? Is it a W bottom? All of that. Now, within the minder, this MBT tells me that, and there's none of them here, in here, as we can see, but it tells me if it's basing, which means I'm going to find a base within an uptrend. I'm going to find whether I've got a stock that's near a 52-week high. Is it going to report earnings? What these are, I know you can't see them, but what this is telling me here, I've taken an indicator called ADX, which is a trend strength indicator. And I don't plot them on the chart because I'm not interested in that. I'm interested in this number. Right? So what this tells me is if I sort this list and I look for the ones with the highest number, those are going to be the ones with the strongest uptrends. And the lowest ones are going to be ones with the least strongest trends. Now, all of these are in strong trends because if it's above, say, 25, the trend is relatively strong. So that's a starting point. And I can sort this by high number or low number. What this is telling me here, this RSI, 8-period RSI, I'm not looking at it as overbought or oversold, but within this minder, what I can do by sorting this is how strong is the trend? And this gives me a starting point as to whether this number is high or low. So what I know, if I look at, I wish I could show you this, but AAP, what I'm seeing here is that 54 is a relatively strong trend. But this RSI being at 11 tells me that I should find a stock that's pulled back over a few days, whereas SEAS being at 72 and even a stronger trend has probably been moving up for several days. It doesn't mean I won't look at it, but notice that it is a 52-week high, which means odds are it should be able to go higher. So minders are powerful tools that help us move through the hundreds. You can see there's 249 stocks within that particular minder. So by sorting here, I can sort things through volume, price, and so on. And the same thing with ones that are in downtrends. And then these volume surges here, I sort this by percent change on the day and just look at the charts as to what are they telling me here. In this case, this stock was bottoming out. It was at resistance. It's starting to turn up. We've got a nice wide range bar on volume, igniting a move and a bullish consolidation. Our moving averages just getting started here. So while it's up at resistance, it's telling me this would probably be a nice setup if it would pull back a little further to that 20 MA and give us a nice buy setup in anticipation that it could move higher from there. Now, as we go through these, I could do this virtually to the end of time, going through these charts and explaining them to you, but obviously there is a time element here. But I'm going to explain to you what's good and what's bad, and I can continue to do that. But, reviewing this is going to help, of course. So, as it says, the goal here is to provide you with examples with my overview for you to review, and then you really should be doing this on your own. Even as I've already mentioned, you're recording yourself and going through the same process. It'll help you tremendously. So, let's say capture charts, mark them up with your comments. I printed them out for years doing that. And it was before there was really software to do the type of things that I've suggested you do with Microsoft OneNote. But, just printing out charts and marking them up. It's a great exercise. Already mentioned, make your own videos. Teach somebody else. Capture your charts. Keep a journal. Microsoft OneNote. Mention it again. Right? I'm giving you the keys to success, and you want to pick them up. You want to utilize them. Obviously, you do. Right? You've taken this course, and now you just have to put all of this together and start doing it. All right, you're going to come across charts just like this. What do you do with them? Basically, you move on. Just reviewing what's happened here. We've got this bearish wide range bar igniting a move to the downside, and it creates this void. You can see how the moving averages were pretty close together over here. So we've got the start of a move here, but this has created this void up above. So while I'm bearish on this, and notice that move up failed and how it failed over here with the topping tail. So what do we do here? Well, it can happen in a few ways. It could either set up an M-top, which creates support, and I like that kind of a pattern where maybe it pulls back a little bit and then comes back up, and it's created a resistance point up there, I should say, and that could give us a shorting opportunity. Sometimes these will move up into the 20 and it makes a higher low and a higher high. That also gives us a great setup to sell short, looking for prices to move lower. A more complex pattern would be a higher low, higher high, and it's a great pattern when it sets up, and then an M-top within this area looking for prices to take out this low. Why would I look at to take out that low? Because of this big picture. Now here's a setup that could pull you in at bad timing, meaning you've got a red bar ignored and then a bottoming tail bar right there, which says it should continue to go higher. Of course, there's no denying that. But look at the distance between the moving averages and the moving averages in price. I do believe that this stock would eventually go higher. But as I look at this, it just doesn't look like this consolidation is mature enough. So there are positives here, meaning this long consolidation and the moving averages moving together. It would not pull back, which was bullish, and we got the red bar ignored. But as far as this being a continuation pattern, as it said, it better be a runner if you're going to put a stop under the bottoming tail bar, because that kind of a pattern could easily take out the low of that bottoming tail bar and really nothing be wrong. It could pull back to here where the 20 MA begins to catch up with prices. So you really have to decide what it is that you want to take and how aggressive you want to be. So if you were to take that, I would strongly suggest smaller shares and a bigger stop, looking for it to add, because it is a very attractive pattern based on what I said. And notice that volume and that professional gap up. It's a great setup suggesting higher prices, But is it ready right now for us to take a full position? I would say not. But there are ways to participate in it, and definitely to put it on a watch list, or if you're going to take a position, a bigger stop as mentioned. Here, prices have gotten a bit extended from the 20 and the moving averages from each other. So pullbacks to minor support would make sense, or to the 20 MA, which is actually what happened. So we did get a several bar pullback. And in this example here, we did talk in the multiple time frame section about wide range bars and looking inside of them. So if we were to kind of imagine this pullback that occurred from the high as multiple bars down being trending lower in a smaller time frame, and this is a daily chart, so which would be on an hourly time frame would be a downtrend, and notice the little topping tail failure there. But what makes this attractive is the fact that it traded under those 3 bars lows and then formed a bottoming tail bar. So another example of a move that started and a consolidation, and notice the volume spike there on the breakout, which is where you'd really want to be paying attention to this particular setup to get long above the high of that wide range bar. Even though it didn't close at the high, the setup is there. It's a pro gap. You've got the volume. It closed above that resistance. Great setup there. And then as you just, observe it bar by bar, the topping tail being ignored, the red bar being ignored. Of course, you'd be looking here to see what's to the left, a price void. So just continue to put it all together as we have been doing. Next setup here, right? We've got a great reversal at the beginning of a move up there at the highs. And excuse the green, but that's the color I had at the moment. But this big move down starts the move. Notice the moving average here. They're close to each other. And then prices push up into that resistance area. And then it attempts to move up. And it's what you kind of refer to as the market saying, I got you. Right? For those that would look to go long a situation like this. Why? I have no idea. But the moving averages are a guide that you shouldn't be thinking long, of course. You should be thinking, looking for a short opportunity, and that breakout and then failure there gave you that opportunity. And this gives you a second setup right there into the 20 with the topping tail. You can see the little breakout failure that occurred there. And then you get this bottoming process that begins at that point. And, you got this upside shakeout. And I've already mentioned bottoming processes tend to be really whippy. But this could be the start. Since we've got this wide range bar here, I certainly would have liked to have seen more volume occur on something like that. But clearly it's a bottoming process. Now here's another short sale setup for a swing where you've got a crack. Right? Crack. You got a nasty move to the downside that slices right through all of the moving averages. They were already declining, as you could see. The 200 wasn't, but the 20 was under the 50, and they were both declining relatively close together. And then prices come up into that area that they broke down from, and look at the green bar followed by the engulfing bar. And you should have already been thinking short, whereas if it traded below these lows, it would have given you an opportunity. This price action that was going on here, I was in a swing trade here, that would really make me nervous. Now, while it would not have stopped us out based on what we've talked about here, this day-to-day price action, because it's in the area of that low, is really erratic there, and it's going to happen sometimes. Now, keeping your stop far enough away and not tightening it up too fast would have saved you in a scenario like that. But notice what happens when it clears that support point. The takeaway here is to recognize that now certainty has come in to this particular stock. meaning there's little doubt that it's not holding. And we can assume that there was a void below. And so you get this wide range bar starting to move down. There's no volume there, per se. But nonetheless, it went down, and it went down lower highs, lower lows. And then when it gets extended from the 20 MA, it did begin to stabilize. And we say that there was a minor shakeout there because that bottoming tail bar did click down underneath that, and that started a retracement. So I drew out this type of setup earlier where prices get extended and then you get a higher low and a higher high moving up into a resistance area. And then this M top is just such a high probability setup for several reasons, meaning you have a downtrend, right? So the trend is down. That's in your favor, and that's why we're only thinking sell here. And then as it comes up into this void, let's just clean that up a minute. As it comes into this void area here, it then creates resistance. So the odds are in our favor. We already would have looked to see what's over to the left over here, and this M top provides us a new setup. Now, if you miss that one, our method gives us another setup, and a great one, where you've got a retracement into minor resistance. I should say resistance, not support. Minor resistance, and you get a nice reversal there. And then it took a little while as this tried to hold this area, and when it failed, the same type of reaction here as there was here, and then the process starts all over again. 3-bar move from a base is the same as a wide range bar, right? Which is what happened as prices exploded out of this consolidation right over here. 3-bar move is the same as a wide range bar. We did get pretty good increase in volume there. And notice this rounding bottom here. Now, we wouldn't have done anything with that, but it's something to take notice of, that it came down to the 200. It was a breakdown, and prices retraced all the way back up again. So I cannot tell you that we would have been able to take advantage of this, because it's just not a setup for us as a swing trade. However, we probably would have found this, not probably, we would have found this on the gap list, and it's still not a setup. But at this point, it is. Meaning it already happened. We're starting to get a pullback. It's happening where the move is just starting. Look at the alignment of the moving averages and how close they are to each other. And of course, you recognize this whole base that occurred there. So this rounding bottom gives you a setup. No doubt this was a concern, but it immediately begins to stabilize and move up again. So are you trailing prior bars lows? Which is okay. It moved up several days in a row. Why not? Now let it pivot and begin to bottom out again. And as it begins to accelerate, start trailing prior bars lows again. I gave 2 time frames here instead of just focusing on the daily. So we've got the weekly in the upper left there, and these green triangles correlate to the daily time frames, and you can see what's happening here. So we've got a weekly time frame that pushed higher and pulled back to the 20 MA. So we've got this nice move up over here and to the 20, and stabilization and a wide range bar starting to move up. And this is happening right there. And there's your volume spike as the move starts. And this was a nice little pullback there as the move just begins. Now, looking at this from the daily time frame, this is a pretty deep retracement right here. But this is how higher time frames and multiple time frames really keep these deeper corrections in a perspective of saying, hey, you know what, this weekly chart, that's still bullish as hell, right? Look at the 20 MA, look at the price action here, right? The trend is up. The odds are that prices will continue to move higher. Now, I don't care for this as a buy setup to take from this time frame. I'd really rather to see things begin to tighten up. And sure, you're going to miss this kind of the move here, but if this had formed a W bottom, I'd be interested in that. But over here, where we're getting this 1, 2, 3 type of continuation pattern and its attempt to move down, remember the 50 MA is an institutionally focused moving average where they're going to buy or average in. And so you've got a move up from there, and that 1, 2, 3 pattern, while it doesn't have a complete void above, the odds are in our favor, and multiple time frames says that this is going to continue to move higher. So a lot of things coming together, and I could continue to show you perfect setups, but I choose not to, and show you things that are not quite perfect, but to understand what's happening here. And I think that's so much more beneficial than to just continue to show you textbook type of scenarios, and to really understand things as they can happen in the real world. All right, another weekly, daily time frame, and looking at this weekly chart, we've got a bottoming process, which you can see here. Right after the breakout that failed, that was certainly bearish on a weekly time frame, and this bottoming process then begins to repair the damage. So we really don't have any clean, clear setups here for our swing trade. Potentially right here, I would have certainly considered that at that point, because why would I consider that? Because we understand that that reversal there is the same as a bottoming tail bar. Right? You understand retracements and what they mean, and multiple time frames, and this pulled back, and while it's a little breakdown on the daily time frame, this is bullish area, 1, 2, 3 type of continuation on the weekly time frame. This area, that is your rounding type of a bottom, your transition from red to green on the daily time frame, and a 1, 2, 3 continuation pattern in an area of support. Master traders put together all of the MT concepts. That's what forms a strategy. Trend, multiple time, say relative strength, relative weakness. We look at our price patterns and bar by bar analysis. That you market bias. What is the trends? What do your market internals say? A lot of times the market internals are neutral. Our focus there is when they're at extremes, bullish or bearish. Has the move just started? And we can tell that quite easily as it moves coming out of a base, the moving averages being our visual aid, or prices close to the moving averages, right? Everything that I've explained, right? And at this point, hopefully it's becoming repetitive, because that's my goal, right? To keep repeating this, to ingrain the information into you so that it becomes second nature. And lastly, has the move become extended? If prices are far from the moving averages and the moving averages are far apart, you know, if you're looking for longs, that there's an increased risk there. So what are we looking for? W bottom, some type of sideways consolidation into a rising 20, a pullback toward the 20, of course a pullback to minor support and the rising 20. Any combination of what I've said to provide us an opportunity for longs, and we just reverse the whole scenario for shorts. And we also, of course, always looking to see if there's some type of a price void. Now, if we're looking for longs and there's a prior swing high up above, take notice how far away it is, of course, but we always make the assumption that uptrend is more powerful than a prior swing high, and that swing high should be overcome. Now, that being said, when prices are very close to that swing high, meaning if you have an extended move and the retracement is extremely shallow, that's not going to be your greatest scenario for a buy. Look for longer consolidations, look for those pullbacks, because even though it's in an uptrend, your reference point of resistance is relatively far away, and as mentioned, anything can happen. So if we can get in near the moving average, near minor support, near major support, near created support, a W bottom, much better odds in our favor. So it's a lot to consider, granted, but as your eye becomes trained for what you're looking at, believe me, you're going to see this instantaneously. It just takes a little time where you just start looking through charts and looking through the scans and reviewing the MT lives that Dan and I do. You'll see how it comes together, and you'll be flipping through charts pretty soon. Our eyes are so trained for what we want to see that if it doesn't pop out and jump out at us as to, hey, that's an opportunity, we just continue to move on. And when you see the chart stop and we start staring, that means that there's something there. And you'll see soon enough, as you start to scan and looking through the information that I'm provided you right here, you'll be doing the same thing. So practice, 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 and repetition, and you'll see soon enough, and it'll all come together. So let's move on to our next section.